Hello, everybody. Richard C. Wilson here at Family Office Club, and I'm also a partner in a platform that I want to share with you here through interviewing one of the co-founders of it, Andrew LeBaron, and it is Motel to Apartment Conversion. So we're going to be talking about this niche area of investing you've probably never thought about, and just like to welcome you here to the podcast and YouTube show, Andrew.
Hey, thank you, Richard. Glad to be here.
Yeah. So can you tell us a little bit about your background, the experience you have in home flipping, and then how that morphed into, flipping ugly motels into kind of workforce housing assets?
Yeah. So history is over 150 flips on my own accord. That ranges from single family to small multifamily, fourplex, eightplex, 16 units. We've purchased, bought, and sold and hold short-term rentals, regular rentals, so on and so forth. Moved into an accidental acquisition of a motel. We actually purchased a hotel, 42 units, and we bought it for 1.7, exited for much higher, and then we bought two more. And we just applied the knowledge of, hey, why don't we just add all of the amenities of a multifamily asset into a hotel? We figured we could buy these at a fraction of the cost. And we were seeing numbers that were kind of mind-blowing, and it all worked out.
Awesome. Yeah. And related to that, I mean, when you think about this niche and the cost of multifamily nowadays, despite, some people saying, okay, well, the real estate market might be a little bit softer due to high interest rates, et cetera, in the economy. But most multifamilies are being acquired at, 60, 70,000, 100,000 a door, or much, much more. Can you talk a little bit about what you have to pay for a motel asset per door and how that's different, and just kind of how you're basically getting into multifamily assets at a much different cost basis you normally would?
Yeah, so we have actually a couple deals right now we're about to ink in the Houston market, and we're acquiring them from anywhere from $40,000 to $60,000 a door, in a market where those same units should go for $120,000 to $140,000 a door. So after acquisition and renovation, we'll be all in at close to 70% of market value. So even when we're done with our reno, even when we're done with our full acquisition, whether we leverage debt or equity, we're still left with a lot of meat on the bones and tons of equity.
Awesome. Yeah. So one of the reasons I was attracted to working with Andrew and Jacob, the other co-founder, is one, they both happen to be Eagle Scouts, and I'm an Eagle Scout as well. And we had just a values-focused way of doing business. And Andrew and Jacob both have a deep work ethic, which is not always the case with the people you meet in our investor club or businesses as unusual. And what I found over time is that there's 1,000 people syndicating multifamily deals, and I had never heard of someone not converting big hotels, but ugly mid-sized motels into multifamily workforce housing apartments, essentially. So the unique aspect of who they are as people, but also the unique aspect of this niche, were a couple of things that just stood out to me right away, made me lean forward and want to get to know them. I also wanted to talk about a little bit the speed of return on capital. If you could relate this to buying cash flow in multifamily or developing ground up multifamily, what's kind of like the typical hold period, or the amount of time capital might be locked up in any one single deal?
Yeah, so the great question. It does vary per project. For example, we have one project right now we're about to acquire, which is a 2008 build, and each unit has a kitchen. It's clean. It's ready to go. It's actually under a franchise, and I can't disclose which franchise it is right now, but once we get that taken care of, I can. And each unit's most likely going to need just a cleanup, and we'll work with the municipality and turn it around. As far as the speed for that property, it could be anywhere from 4 to 6 months, and it's completely done. For others, it could be just a little bit longer, but it's not, comparatively, it's not a ground up development type of deal where you're not going to see cash flows for 2 to 3 years. In our case, it's pretty quick.
Right. Makes sense. So one thing I always stress to people raising capital is to focus on a niche, focus on geography. One thing I always tell investors is to find someone who's hyper specialized. And you guys are acquiring ugly motels, and right now you're focused in Texas in doing so. So it checks a couple of those boxes. You've had success acquiring some assets to date. Are there any other things that have led to your success or reasons why you think investors have come in that would be kind of educational to share with others? Because most people listening to this are not going to be familiar with the acquisition of motels and then converting them to a different asset class, which is multifamily or apartments. What else do you think is important to mention for those listening for the first time on this topic?
Great question. So for investors listening, we actually partner with advisors who've done 20 to 30 plus same style conversions like we're attacking. And although we're not as seasoned as they might be, we are seasoned equally because they're a part of our team. So, working with us, we have a conglomerate of, 20, 30, 40 plus deals under our belt already. I think leaning on those who have already blazed the trail is extremely important in this game, especially with a newer niche like hospitality conversions into multifamily. We work closely with municipalities, we work closely with cities, and we have a very long due diligence period where we ensure that the deal pencils without risking any investor capital.
Right. The other thing I've noticed is that each of the deals that we do are seller financing. And that greatly helps with the ROI, with the returns, with taking complications out of the banks messing up the deal at the last minute. Oftentimes a seller financing document is 3 to 7, maybe at most 10 or 12 pages. And a bank lending doc is 180 pages of different ways they can pull the loan, call the loan. You broke a covenant or X, Y, and Z could happen. And now the bank's going to do this to the loan. So the simplicity, the speed, the less risk of the deal getting blown up are all different things. The return on capital are all different things I love about seller financing. That's what we try to do within all deals we do, whether it's motels or otherwise. Where can people go if they have a motel they're sitting on that they'd like to convert with you as a joint venture? Where could people go to learn more and, text message you or email you in case they would want to work together on one of these opportunities of converting a motel with our team?
Yeah, so you could reach us at motelstoapartments.com. You just scroll down to the bottom, book a time with us. You can chat with us, motelstoapartments.com, or you could just give us an email, info@motelstoapartments.com, and we'd love to chat.
Great. And then what about a text message? We can give them your phone number or my phone number, or what do you think is best for that as well?
Yeah, you can text me directly, actually, 480-980-9022.
Awesome. Yeah, I know a lot of our investors are on the move and love to get texts instead of emails for important stuff they don't want to miss. So great. Well, appreciate you being on here. I know we could speak for an hour or two, but this is just meant to be like a quick intro so people are aware about this niche strategy. I know some of them have met you at our Family Office Club Investor Summits, and we're actually going to do a fireside chat on the structuring of creative real estate deals, seller financing deals, and just different investment deal structures that are possible at our Dallas event coming up on the 29th of June. We're having an investment mastermind there, and Andrew's going to be in front of the room doing a fireside chat with me there. So hope to see many of you there, and thank you for your time here today, Andrew.
Thank you.